Hello everyone, good afternoon. Could I get a quick sound check and make sure that you guys can see the chart? Awesome, awesome, awesome. Thank you very much, Momentum Trader. Christopher, thank you. High Speed Trading, appreciate it. Good afternoon. JIS, awesome, awesome. All right. All right, we're good to go. So we're going to go ahead and get into some analysis today. Again, not terribly interested in reading price action in front of you, especially with the conditions that we're seeing, but definitely can learn some things in hindsight and why it is that we've been expecting the delivery. But before we get into the analysis itself, just a few housekeeping things. The website is making progress, so we are reaching the end point of that, so I'll have that ready for you guys. I do appreciate your patience. I know a lot of you guys are asking about the details, and as much as I wish I could give it to you, we're waiting for the website to be released, so making good progress there. And again, still tentatively looking at the beginning of November, so we can have that out, and then we'll begin our enrollments for the private training. So with that, going to go and take a look at crude oil, maybe take a look at glance at S&P real quick, and not going to keep you guys here too long. Got a swimming appointment after this, so gonna enjoy some sun. So Momentum Trader, what's up, my man? Nabil, yo brother, yes sir, I'm doing good. High Speed Trading, afternoon. Anita, Denisha, hello, hello. Good to have you guys. Matthew Davis, glad to have you. Yeah, I missed you guys as well. No lives this week, and as you guys can see, the price action has been what it's been, so we've been pretty reserved here on our end at Adora Trading in terms of risk, but also even in the analysis we're sending in, just giving you guys the higher time frame outlook because the intraday is extremely tough. It's volatile, and it's been range bound for the most part in ES, which is why transitioned over to crude oil. So we'll go and take a look at all that good stuff. All right, Christopher, what's up? Let's get into it. Absolutely. Eduardus, hello, hello. Wasim, David, what's up? What's up? Cyclops, yo, brother. Trust you're doing great. Yes, sir. Hope you are as well. James Evan, is it just me or lagging? I think we should be good on this end. Yeah, I think everything's good here. Hi from Kosovo with live. Hello, hello. Awesome. All right, guys, let's go ahead and get into it. So real quick before, hold on. Before we get into todo bien? All right, awesome. Everything's good. All right, so let's go ahead and take a look at S&P real quick. And not going to touch on much there, but really just going to cover why it is that I've been focused on crude oil today and why I actually traded that. And then we'll look at the execution itself. So weekly chart, just give you guys the higher time frame perspective. Haven't really sent much updates since Sunday, but again, you guys know what we're looking for. Lower prices S&P. Again, we called this 2022 model on a weekly chart. So position traders, we got you covered too. I don't know if many of you guys are position traders, but we're using this for our bias. So we see we trade up into the fair value gap. Order block hitting that opening price. Again, not going to annotate it. It's going to go through this pretty quick. And then we're selling off from the inefficiency here, just as we were expecting. And then again, if we're bearish, do we expect the market to open and run lower? No, we're going to allow the market to open, manipulate, and then do the true move. So still looking for lower prices. Nothing has changed there. Briefly looking at NQ. Same thing. So we're looking at the same thing on NQ. Bodies respecting that volume imbalance there handsomely. All right, daily chart. So send an update into the Telegram, and again, if you're not there, you're definitely missing out. Sharing that Tuesday, we likely saw the high of the week priced in, and then we see the market rotating lower to the levels that we are looking for. So I trusted that was the high of the week because let me go ahead and put the lipstick back on the chart. So we saw an SMT with the Dow here at a critical level in a premium. Remember, I told you guys last week why they'd want to take it there, and I told you guys that we'd be seeing a sell-off from these levels. But again, look at time and price. So here we see the timing aspect. What day is this? Tuesday. So let's drop down into our hourly chart. And then what premium array were we keying off of? What level was I taking everyone's attention to the past few weeks as the high, or where I'm expecting the high to manifest for this retracement? It was this inefficiency here that we're seeing in gray on a daily chart. Again, we'll go back to that. But again, it's always time first, then price. So I figured this was the high of the week. Why? Because Tuesday is doing what? Manipulating. So here we open. So it's always open, manipulation. Get the retail crowd off sides. People that don't really know what they're looking for, don't understand the higher time frame. Equal highs here and here. Cleared that out. So breakout artists are trying to go long. People see this as resistance broken. Market's going higher, whatever. This is when I'm sitting in a Telegram. High of the week's been priced in likely. And then we see that high, and then we see the acceleration lower. But the delivery has not been very clean. Just looking at the hourly chart, a lot of back and forth here. Hitting levels we're looking for. Swing low, trading lower into this liquidity here. So it's hitting the levels that we'd be looking for and that we've been anticipating, but the delivery's been tough. A lot of back and forth here. Today, a lot of back and forth, whipsaw price action. And again, wasn't terribly interested in that, although we are still having targets hit. So swing traders, people that are trading on higher time frames, taking the analysis straight to the bank. So again, back to that daily chart here. So swing high on Tuesday, creating that high of the week. Another thing, like I said, I could give you guys some insight into order flow and the specific tools that I'm using to probe order flow. So here we have a wick. You see how we traded right up to that wick and stopped just short of consequent encroachment, while also hitting that daily fair value gap and breaking down. That gives me confidence that we're seeing weakness, because now I'm starting to see weakness signatures. And then here we have Dow with NASDAQ making lower low, but Dow made a higher high here, comparably at the highs. So that crack in correlation is also further confirmation. And again, as I taught you guys last week with the dollar, how I'm already anticipating SMT. It's not something that I need to confirm what I'm looking for, because I already know what I'm looking for. So I'm already anticipating it's going to form, and it's not something I need to see. But when I do see it in the charts, obviously it's just extra confirmation. And then again, the hourly chart, not going to talk much more on S&P. Just the whipsaw back and forth. But again, we're bearish. So what's the order flow going to look like? We have opening here at midnight. We have open, accumulation, manipulation above these highs, and then the distribution. So why would we expect bearish power 3? Because we're bearish on that daily, weekly chart. So again, everything always reverts back to those higher time frame levels. 5-minute chart here. There's the whipsaw of Powell speaking. Again, this is why I wasn't too interested in trading S&P while the Fed chair was jawboning, just because of all the back and forth that we're seeing. So not terribly interested. Was tape reading it a little bit. I did take a scalp from this high down to these levels here in S&P, but nothing terribly exciting. And we're getting the sell-off lower into these levels here. My next level of interest would be that level there. But again, nothing I'm willing to risk capital on, because look at these conditions. Extremely tough trading. And really, it's just a slaughterhouse, especially a retail slaughterhouse, having the market trade lower, equal lows. So support, trade higher, above these equal highs, buying the breakout, rejects, attacks the traders with orders there, rejects that high, trades back up into the rejection block here, which is the highest close. And then looking at Dow, again, we see that SMT. We don't need it. We already know it's going to form. Why? Because we're bearish. So Dow makes that higher high, while NASDAQ and S&P fail to. So that was all the confirmation I needed to go short. Get below this inefficiency. So why am I not trusting this inefficiency as support? So again, going back to that higher time frame institutional order flow, which is lower. So looking at the 5-minute, I'm not expecting the market to come into this fair value gap for like a 2022 model to find support and go higher. I want to see it get below it and then use it as resistance. So again, you guys know that we qualify these inversion fair value gaps real time. So we get below it. Look at the bodies there. Wicks doing the damage. That's fine. But when it comes to the close, we do want to see respect for these levels and then sell off aggressively into the levels that we're looking for. So still bearish. My targets remain the same for S&P. So if you guys don't know what those are, definitely check out Sunday's session. But back to crude oil. Let's go ahead and take a look at it. Just D'Angelo, first time here, looking forward to it. Awesome, glad to have you. CL is $5 a tick. So the specs for CL, it's $10 percent, yeah, per tick, yeah. There was many manipulation, exactly, and that's why we always look at the economic calendar, because we already know to expect that. So just going to touch on that real quick. A lot of newer folks in here, so covering some of the basics. We're not caught off guard by this seek and destroy. So usually when you guys see my associate or myself sending analysis into the Telegram, it's easily 80 to 90% strike rate. Reason being is because we know the conditions we want to operate in. And when you guys see we're not sending analysis, we're not confident, because even though we know it's going lower, as we've covered ad nauseum, how are you going to position yourself with low risk, high probability? I'm just really not seeing that in this condition. But we're not caught off guard because we understand that economic calendar. Powell speaking at noon opens up manual intervention. So this is not IPDA or the algorithm doing these repricings. That's manual intervention. And like I said, it's just designed to be a slaughterhouse, taking out short-term high, short-term low, short-term high, short-term low, and just whips on back and forth. Again, not terribly interested in trading that. Back to Crude. All right, so I just sent something into the Telegram a few minutes ago, shared an execution with you guys that I would be covering here. Matthew Davis, I just trade indices. When should I try trading crude oil or any other products with ICT methods? That's a really good question. So that really depends on your experience level. You know, early on when people start trading, it's best to just focus on one thing, master it, because ES is all you would need for a lifetime. So whatever asset it is you choose, it is more than enough. And really it becomes problematic when you start bouncing around a lot. The reason I'm comfortable trading crude oil is this is actually where I started trading a long time ago. And I'm comfortable with the market. It's something I've studied. It's something I've back tested. So the other part to answer your question is, you only want to trade something once you're comfortable doing it. Have you seen it move? Do you understand the characteristics of it? And then once you feel confident to risk capital or trade it in your demo account, that would be the appropriate time to transition. But really, you only need one asset to do really well. So looking at the Telegram here, I'm going to go ahead and share the execution with you guys. So 1 minute chart, silver bullet going long, 1, 2, 3 times. So built in 3 different pyramids, started with 3, 2, 1. So that allowed me to build in 6 contracts, partials here into that regular trading gap or the settlement price. I think this was high of day. And again, we'll go into all the details, but I'm just trying to recall it off the dome. And then this was London highs, and then let one contract run for the daily range to close out in the last hour. And again, I'll cover all those details, but this is the execution. So no hindsight, we're trading what we're calling. And then again, for those of you guys that were there on Sunday, you guys know what the business is on crude oil and what it is that we're looking for. So again, these are the executions, 3.5 for the day on this trade. So now let's go ahead and get into the details. So I just looked at the 1 minute chart, showed you guys the executions there. But now let's go into what actually makes that 1 minute chart high probability. And this is the top-down analysis. As I told you guys, top-down analysis is the holy grail. The secret you're looking for to find that consistency. Obviously, never 100% win rate. You do take losses, and that's why you have to have good risk management. And on that point, I shared in the Telegram yesterday as well, I took a loss in S&P. Conditions are difficult. It's delivering the levels we're looking for, but the delivery is tough to position yourself. So I did take a stop loss, and full transparency, nothing to hide on this side. So I went ahead and shared that with you guys and how I manage the risk most importantly. Early on, I wish I had that type of guidance, which was being told, okay, you took a loss, keep it small, come back another day. Because obviously you guys can see with the monster trade we took down on crude oil today, it's more than brought back the drawdown. So point is, you got to keep the loser short, or cut the loser short, excuse me. On your losing days, when you're not that in sync with price, step away. There's always more opportunities. As I always say, our next our next setup is scheduled into the marketplace. So always have that in mind. There's never a shortage of setups. Paul, I passed my phase 2 account this week. Awesome, congratulations. All right, so monthly chart here for S&P. So we've been bullish on the monthly ever since we traded down into this bullish order block. One moment, guys. I'm gonna go get a drink of water. All right, guys, we're back. Had to wet the whistle a little bit. Raptor, will your mentorship help Forex traders too? Yes. When I train people privately, whatever asset I'm trading through can be applied to everything. Oh, that's hilarious. I was just looking at the Telegram. I left one position running, the one position. Yeah, that's awesome. That's exactly what it is. And I'm gonna teach you guys how to do that. So there's a video of like, it's a meme of someone running past the end zone, and it's like when you leave a runner. So I'll teach you guys how to leave a runner and how I do it with a methodical, systematic approach. And I'll teach you guys that again. I told you guys I'd be teaching you an advanced money management technique today as well to implement in your trading. So let's go ahead and get into it. That was a good one, Abraham. All right, so bullish order block on the monthly chart. I took our attention down into this level. Why? Because I'm bullish crude oil longer term. I gave you guys my longer term projections, which are these highs up here. So I do expect crude oil to be up into the 120s. So again, we hit the bullish order block in here, started trading higher. So again, we were all over that. Again, you guys that have been with us, you know, we've been calling this thing higher to these levels here. So we're still bullish. All we did was retrace where to, bullish order block. And again, I'm just recapping briefly what I shared on Sunday. Fair value gap, high probability bullish order block here. Trade into that, rally higher. So the bias for this week, or the weekly candle, is bullish. So I'm focusing my attention. I want to put most of my gunpowder behind long setups. Why? Because higher time frame institutional order flow. Remember, I told you guys before, the volume that and the inflows that come in through these markets are primarily through monthly, weekly, and daily charts. So you have to understand those time frames to make your lower time frame trading high probability. Again, I can't count how many times people have expressed their frustration on the 1 minute chart and in these lower time frames. But I'm going to repeat this again. And for those of you guys that are with us, you're probably tired of hearing it. But again, there's a lot of new people that need to hear this. If you don't understand your higher time frames, your lower time frames, you're going to be very unsuccessful in your pursuit of trading them. Unless you have higher time frame institutional order flow backing your trades, your lower time frame trades are going to struggle immensely. So it's important to understand these higher time frame signatures and understand top-down analysis. So again, we're bullish on this week. So again, if we're looking for higher prices, we're going to expect an open, drop, and then expansion. So I'm trading within that higher time frame bullish order flow. So daily chart, when we were trading lower here off this retracement after we hit the levels that we were looking for, I shared how low can we go, and I still feel confident being a bull. So here we have the bullish breaker. So I said we can trade down into the breaker and into this fair value gap. So here we have fair value gap, breaker overlapping. So right at these price levels, I want to see the market show me a willingness to rally. We trade there. We ended up having a gap up, liquidity void, filled that void. Look at the consequent encroachment, repricing, not getting into the discount end, which is a bullish signature, and then the market accelerates. Trades down into this inefficiency order block, 2 down close candles, inefficiency, trade into it, expanding. So the daily chart is bullish. So I'm going in each day expecting what? Expansion higher based off that daily chart. So now this is where you're able to let your runners run. You have to understand these higher time frame details. So looking at this candle, if we're bullish, it's a Thursday, so we're still going to expect what? Expansion. I'm going to hold till the close. Why? because understanding the anatomy of a daily candle, if we're bullish, look at all the days we're bullish, are we going to trade up and then close near the open or on the low? No, we're going to close near the high. Looking at all these bullish days, the market does what? Closes near the high. So that's why it's always time first, then price. Because what time of the day is it likely to make a high on that daily candle? Into the 2 to 3 o'clock hour. So in the last hour and a half to hour of trading, that's where I'm going to expect the high to manifest. So if I'm able to get something on in a discount near the open, I'm going to hold to the close. So I'll take partials, put a stop loss at a level where I'm comfortable, and then I'm going to hold and leave a runner till what time? The close. The time I'm expecting the high of the day to form. So again, can't emphasize this enough. Time is always more important than price. Putting on a bit of a clinic here in this one. All right. All right, hourly chart. Just going to take this off. So we're bullish on the higher time frame. We've established that top down. So now how do I use this information in my lower time frames? So we're bullish, again, looking for higher prices, and we're trading within this dealing range. From this low to this high, and here we have equilibrium. So if I'm bullish, I want to see us do what? Trade into a short-term discount and do what? Aggressively accelerate. I don't want to see the market spend a lot of time in discounted valuation. We should trade down into it and aggressively expand. So this is why, as I'm going into my 5, 1 minute, 15-minute charts, we're doing what? Looking for expansion higher. All right, take this off, clean it up a little bit. So what other level do we have there? Bullish order block. So this down close candle, the change in state of delivery, extend that through, the algorithm's referring to that. At what time? During London session. So this is also a classic buy day template where we have the low of the day in London. New York session, which is right here, gives a retracement for a optimal trade entry. And that's clear on the 15-minute. So again, New York offers that optimal trade entry lower before the expansion. Why is that? You got to understand timing aspects. If New York smart money traders are coming into the market at this time, they're not going to buy it at premium. They're not going to buy above highs. That's retail. They're going to wait for the market to come down into a discount, offer them a cheap price, and this is where they're accumulating, which is also below that midnight. Accumulating here for what? The expansion higher that we've all been looking for the past few months. So back to that hourly chart. Putting a lot of things together here for you guys today. So we go from internal range liquidity, which is inside the range, to external. Why am I expecting external range liquidity here? Why wasn't I looking for it on this side? Because we're bullish. So we're just going to trade into a discount to reaccumulate to go higher. So then I'm going to expect external range liquidity to be traded to. So that's why this level was where I'm looking to take my profits, because it's previous day's high. And again, understanding, going back to that daily candle, if we're going to do power of 3, open, manipulate, who's accumulating at this level here? Below that opening price, below the sell side where retail has stops? Smart money traders that are viewing the market like you and I are, where we're capitalizing off this discounted price to do what? Distribute it higher. And simply put, that's all you're doing with these concepts. This is a classic Dora Clinic. Needs several rewatches. Appreciate it, Sal. Glad to have you here, brother. So 15-minute. Let's go ahead and get into the business here. So again, keep in mind the higher time frame levels. So this thick line, the reason I made it thick, I'll make it a little bigger, is because that's the hourly order block. So we're trading down into the hourly order block, which is also a 15-minute fair value gap in here, in discount, again, to the dealing range we're trading in. So this dotted line, awesome feature that TradingView integrated, by the way. So now we don't have to draw the 50%. But dotted line, consequent encroachment, look at the bodies respecting that. That's algorithmic. That's the algorithm communicating to me what? That we're bullish here, because the bodies aren't even willing to get below consequent encroachment. Again, wicks do the damage, but the bodies tell the narrative, which is also occurring at what level? The hourly order block. At what time? London session, when I'm expecting the low of the day in a classic buy day. Lots of factors. Inversion fair value gap here. We're bullish. We're looking for what levels? This high. Why that high? Because it's London high. So it's the liquidity, it's time-based liquidity that I'm looking at. So this is what London high. What high is this? This is the New York PM session high from the previous day. So why didn't I like this high here? Because that's Asian session high. That one's not of interest to me. I'm looking for session-based liquidity. So my next partial was where right here, which is PM session high. And then here we have previous day's high, which is also a significant liquidity pool. And that's where I was holding my trade into. So back to this inversion fair value gap. We're bullish. So I'm not looking at this as 2022 model, drop lower, trade into the fair value gap, sell short. I'm looking at it as high inversion fair value gap. I want to see us get above it, use it as support and like a launch pad to send us higher. Why? Your higher time frame, or excuse me, your lower time frame premium arrays aren't going to work if the higher time frame itself is bullish. So because we're looking at higher prices on a monthly, weekly, daily chart, this fair value gap is not going to be the factor that holds price down. It's going to be used as an inversion level. Or for example here, bearish order block. Man, we should have charged for this one. All right, so looking at these last two up close candles before the move lower, we would see that as what? Bullish order block. Extend that through. But it becomes a breaker when the inversion aspect is applied to it. So we trade lower, and then we're what? We're bullish. We're in a buy program. So I'm not looking at this as bearish order block, trade up and sell off. I'm looking at it as get above it, use it as support, and I want to see it rally higher from there. So it's narrative that tells you what PD arrays to use. It's not just let me look for this model or let me look for this pattern. That's something I really emphasize, especially when I'm working with students that I'm training and working with, is we're not here looking for patterns. We're not looking for your breaker. We're not looking for your order block. You're looking for narrative. What should the market do? When and why should it do it? Then once you understand that, you can start applying your different entry models once you understand all those things that then come together. Man, and we thought it was just support and resistance at first, right? All right, let's drop down to the 5-minute chart. HS, do you only pyramid trade on your A+ setups? Absolutely. Everything needs to be in alignment for me to feel comfortable pyramiding. And that is the top-down analysis. If I'm trading in line with all those time frames, that's what makes me confident to pyramid. So I'm going over what constitutes a higher leverage trade where I'm putting 6, 8, 10 contracts behind. So again, don't lose track of the higher time frame arrays. Remember that thick line's the hourly order block, and the purple rectangles that 15-minute discount in efficiency. We trade down to that level. Look at the bodies here on the 5-minute. What do we want to see here? Aggressive displacement higher. We trade down into a short-term discount of the dealing range that we're in here. We trade down to a discount, take the stops. What do we want to see? Aggressive acceleration higher. We get it. So I'm trading the silver bullet. So I'm getting in at 10 o'clock because we had high impact news at 10:30 for crude oil. I think it was natural gas numbers. So we understand that news is not moving the market. It's the fact that the news is coming out that market makers use that sentiment to manipulate price. And then it justifies in the people's eyes, okay, oh, this is why the market was moving because of this news here. We're not looking at the news. We don't care about it. I don't care what the natural gas numbers were. I don't care what inventories are. All I want to know is what time of day is it and where are we trading at? And then if I know there's news, I know it's going to be an accelerated delivery. So that's what allows me to trust holding for the daily range. Matthew Davis, why do you pyramid if it's A+ anyways? Wouldn't it just get easiest to get in at once? I'll go ahead and cover that. That's a good question. So again, inversion, fair value gap here on the 15-minute. Use it as support, trade higher, also bullish order block. Why? That's the change in state of delivery. From the expansion higher, we retrace down into discount, displace higher, change in state of delivery right there. Hitting it once, twice, 3 times, once more. What's occurring there? The algorithm is offering it to people that are in the know, that understand this is a level to accumulate at. Why? Because time of day. So the silver bullet was taken in here. on a 1 minute chart. And again, I shared you guys why I was looking at these specific liquidity pools for my partials. All right, so now let's get into the business on the 1 minute chart. So I am getting long after the 10 o'clock hour. The news hits at 10:30, which was the, again, natural gas numbers, I believe. Again, not interested in the data. And then we trade lower into that 5 minute order block, and then we displace higher. So I'm using this entry here as my silver bullet. So make that purple. So displacement, shift in market structure. After hitting a 5 minute bullish order block, when we're inside of that 15-minute inversion fair value gap, remember, which is that blue rectangle. So I'm buying in here. And then where was the other entry? Okay, yeah, I built them all in at once, actually. Okay, so I got long on the touch of this order block in here. And then as we traded down in the volume imbalance here, I built in one more. So the question is, why do you pyramid? Why wouldn't you just go in all at once? That's a great question. So here's my first entry. I'm going 3 contracts, but the risk on that trade is down to here. But as I'm pyramiding in newer positions and we create new discount arrays like this volume imbalance, then we had a breaker here, I'm able to buy more, and then I'm able to reduce my stop loss. So my risk remains the same, but I can take down 3, 4, 5, sometimes even 6% gain on an account without even risking more than 1%, because each time I'm pyramiding, I'm raising my stop loss each time I'm adding new entries. So I'm not taking on more risk, but I'm putting on more potential reward. Again, it takes a long time to get to that point of trading. And again, this is a private training level YouTube video, very advanced in the weeds here. But again, this is, those of you guys that are here, you guys know who it's for. So looking at this fair value gap here, again, building in those positions, expecting that expansion higher. So here we have the settlement price. So we're looking at regular trading hours. So the reason I wanted to accumulate here inside these levels is because we're below that settlement. So you can also use that as an opening price, but also we're below that midnight opening. So the midnight opening is right here. So midnight open here, this is where I'm doing my buying, below that midnight opening price. Why? Because if it's going to be a bullish day, a bullish candle on that daily chart, then I want to buy below what? That opening price, because that's where smart money is accumulating it at a cheap price, because then we're going to distribute it where? This high here, here, and here. So back to that 5 minute chart. So again, this is where I'm accumulating, and then I'm distributing at all these key levels. So again, why hold the runner till the last hour of the day? When you go do your back testing and you're looking at old data, study at what hour, at what time of the day is the daily range usually capped. So if you're bullish, look at what time of the day is that high or low forming. And again, because we're in continuation profile, we're not in market reversal profile right now. Because why? We're bullish, we're expanding higher. So I'm going to get in and I'm going to hold for the close. How do I do that? You know, how do I weather the lunch consolidation and retracement? What I do is I put a stop loss in for where I'm comfortable seeing the market retrace to. I close the charts and go do something else. I put alerts and I check it at what time. So I already know what the algorithm's going to do. I'm not guessing when the high of the day is going to be made. I'm expecting it. At what time? 3 o'clock. So I put in my orders here as I'm taking partials at all these levels around 1 o'clock. I'm putting in my stop order here where I didn't want it to violate because it's in profit. So if I'm getting my entry here, I am putting a stop order there so it takes me out in profit. So there's no risk to holding for the daily expansion, but all the upside. Just that one contract ran over $2 in crude. So $10 a tick, that's $2K just on that last contract. So being able to trade like that, it's advanced money management, because what it allows you to do is hold for that daily range. How do you do that? You have to understand top-down analysis. You got to know what the market's reaching for, which was, again, that previous day's high. So it's a lot of things that come together. Again, I wasn't able to do this in my first week. if what wasn't done in my first 3 months. It takes time to start trading like this, but having these theories and ideas introduced to you will open your eyes to all different kinds of opportunities that you didn't know were there. So looking at this here, I get a lot of questions about over trading. How many trades a week do you need? Let me put it to you like this. If you got one setup like this once a week and you stop, that's something that would beat a day job and probably outpace it in terms of payment. So you only need a few good setups a month to do extremely well. Once you know what you're looking for, you can take down bigger hauls using this logic. So again, stop is there. I'm holding till what time? 3 o'clock. So I'm checking my charts at this time. And then at what time do we trade into the previous day's high? 2:30 going into 3. And again, that's more than enough from accumulating down here. That's a monster trade. So looking at it on a 1-minute chart, and then we'll go ahead and close up here. So if I'm getting long in here and my stop loss is below this consequent encroachment, a wick, which again, the executions are there. So whenever I'm teaching, whenever I'm explaining things, you guys can trust that it's no hindsight. So just a previous day's high. We're looking at an 11-to-1 risk to reward. So this is why pyramid. So to answer that question, and this is what you can do once you understand timing and price elements. So this is why I'm expecting that daily range to be capped, because of the timing aspect of it. It's going to be capped in the last hour, and that's across all assets. For example, S&P. What time did it make its low a day? Last hour. So if you were able to get something on, let it run, what time would you close out? Last hour. So again, this is universal. I sometimes get asked as well as, because someone just asked me, would I be able to teach you how to trade Forex? All the markets are doing the same thing. Here we're looking at a commodity, crude oil. We look at the United States stock market. We look at Euro. All those things are abiding by the same logic. So we're able to exploit it as traders. So again, man, I could have a field day with this on Instagram. Like the guys there that share the 100-to-1 trades every single day, and they're still trading micro lots. But yeah, you guys know how it is here, though. No fluff, showing you guys receipts, what we're doing, what we're looking at. And again, we called all this at the beginning of the week. So no surprise why we're looking for higher prices. And again, just giving you guys some insight and sharing what you can do once you get this skill set. So I think that's going to go ahead and wrap it up here. I'm going to look at a few questions. I'm going to go ahead and get going. Beautiful day out. Can you talk about EU and GU and dollar? I already shared what I'm looking for on dollar, not interested in it because it is consolidating. So again, I give you guys a filter for a reason, because that's what I'm using for my trading. So remember what I told you guys about dollar? What I would have to see to feel comfortable. I wanted to see us trade into this fair value gap and run away. So on this hourly chart, when we traded into this inefficiency here, I told you guys it has to run now and displace away, not trade up and pull back into the range. Because if we do that, that indicates what? We're in consolidation profile. So this is why we haven't been sending out that much analysis, because the dollar's not clear, it's consolidating, and the S&P is delivering more high resistance in nature as a result. Why? Because we looked at gold, we covered several factors of things that are going on around the world, and again, those things are influential in the markets. So again, this is why I'm not interested in dollar until we leave this range. Obviously, you guys know I'm bullish, so I don't want to see us go below this low. But again, I told you guys, it's never just a straight shot to our levels. You sometimes have to weather consolidation or retracements. And again, we called the retracement lower, and we were all over this consolidation. That's why we're not sending in analysis. So when I first started, it would have been awesome to have someone telling me when we're going to retrace, when we're going to consolidate, and understand why it's doing it with logic. So again, not very interested in dollar until we leave this range to the upside. But looking at bonds, phenomenal delivery. The lows that we were looking for, the sell side, on a monthly chart was booked, I believe, yesterday. So beautiful delivery there. And I'll expect us to start getting lift in dollar. I think it's just lagging behind the bond market, again, because of things we have going on around the world. How do I get in private mentorship? So right now I'm not opening private training. It's closed currently, and I'll be opening it up again in January, and then I'll get back to work with private training and mentorship at that time. Jay, Rich, sick? Definitely, man. It was definitely a whole new world once I had my eyes opened up to all this. Matthew Davis, so you only risk like 350 bucks practically. Crazy stuff. Exactly. So I'm able to risk a little bit because remember, risk management is more important than what you're making. So again, you guys looked at my loss yesterday that I shared, and again, I'm open about it because that's what trading looks like. Professional traders are taking losses. But how do you handle those losses? That's what's going to determine what your trading career looks like. Are you able to step away, understand that you're just not in sync with price, or are you going to insist that you're right and keep pushing? Early on, I did that. And then again, as many of you guys have already realized, you guys have been trading long enough that that's not how it works. So again, I try to teach you guys how to have a professional mindset, a practical mindset to go about this business. Jay Rich, would you only hold the whole range during red folder days? Yes. So, I mean, any high impact news driver, which would be orange or red folder news, as long as there's high impact news, I understand that they're going to use the volatility injection of that news driver to make a range expansion. So as long as there's news, as long as I have a draw on liquidity, I know where the market's going, then I'm able to trust to hold for the daily range. Christopher, awesome, man. Great info. Thanks. Thanks for joining. Cedric, hi, Dylan. I noticed you used the adjusted. I do use the adjusted, yeah. Just for crude oil. Because if it wasn't adjusted, you would see that there's a big gap here. So just to cover your question. And then again, that gap wouldn't be accurate because it's just a contract switch. So that's why on S&P, when I'm trading that, I just use the official contract, so I don't have to worry about that. But if you put on adjusted, it'll show you what you need to see. It's 4 o'clock. And for those of you guys that have TD Ameritrade, you know exactly what that is. Do you watch dollar when trading CL? That's a great question, and it's a member question. So let me go ahead and put you on some game, high speed. All right, so let's look at the CRB. So when I'm trading commodities, you guys know whenever I'm trading currency, if I'm trading the stock market or stock futures, I look at the dollar to gauge risk on, risk off. What do I use as my general market barometer when I'm trading agriculture, whether that's wheat, corn, oil? I'm looking at the CRB index. So the CRB index is basically a basket of commodities. So by looking at this, it's going to tell you the general tide of the commodity markets. So I'm also monitoring this when I'm trading any commodities, whether it's gold, crude, corn, wheat, whatever it may be. I'm watching this asset because this is going to tell me what the aggregate is doing. And again, you typically don't want to be trading against this. So it's just something I monitor, and I want to see it do what? Be bullish. So the whole time I'm calling crude oil to you guys all these months, these are all the things that are going into my analysis that I'm factoring in. So I want to see this do what? Trade higher. So looking at the daily candle for this, we'd see what? Expansion higher. So I'm monitoring this as my barometer when looking at the commodity market. So I want to see this moving. It doesn't need to be lockstep, but I do want to see them moving in a correlated fashion. It'll allow me to trust that everything's a green light for higher prices, and then again, closing near the high as the analysis called for. David, I expected a much bigger move to the downside on the indices this week. Yeah, the economic calendar was tough. And again, there's a lot of things that contend with as traders with all the things going on around the world. And the currency not moving with dollar. So that's why dollar's not moving. It tells me that we're not going to see a big move in the stock market. So it's all these things coming together that gives me that clarity. And again, that's why I haven't been live streaming. That's why I haven't been sharing analysis. As you guys can see, ICT hasn't either. So there's definitely probably something to that you want to look into. All right, guys, I think that's going to go ahead and wrap up the session. I think we have one more member question. Carla, hello. Does holding from midnight price to the last hour a day for the daily expansion apply for Sunday through Friday or specific days a week? That's a good question. So again, you guys know how I always preach time is more important than price. So there's several factors to that. So looking at this week, we're seeing what? Classic delivery. We're looking for higher prices. So what's Monday going to do? Accumulate. Tuesday, manipulate, low of week. So again, it's time first, then price. So why I'm expecting this to be the low of the week inside the order block, inside the fair value gap? Because time, Tuesday, is when we expect low of the week in a classic bullish week. I'm expecting this to be the low. So that's why I'm going in each day looking for what bullish setups. So looking at Tuesday, Wednesday, Thursday, those are going to be the better days to hold to the close. And then if you look at Tuesday, what did we do? Close near the high. Wednesday, we did pull off it a little bit. So you might have not have gotten the full run, but Thursday, we see the same thing. What? Closing near the high. So it is day specific, like Friday, for example. Would I hold till the close tomorrow on a Friday? Probably not. Why? Because we've had a bullish week. So we may see what's called TGIF setup, which is pulling back into the range after having a one-sided week. So there's a lot of factors there to consider. Again, it's not just it's Friday, the market should pull back into the range. There's other things you got to consider. But Friday, Mondays with days I'd be reluctant to do this. Tuesday through Thursday are the days I'm primarily looking for this. And again, if I get a setup like this once a week, twice a week, why trade anymore? So it'll be very light trading for me going into Friday. And again, looking at the market, nothing has me looking at S&P real quick, because you guys know I primarily trade the S&P. All right, so called that low for you guys here real time. Just smashed into that, probably random. But again, just not interested in trading the delivery on S&P. I'll see what we have on Friday, because again, you guys know my targets have been these lows in here. So maybe I'll see if I can get a nice position on for these lows. But again, because it's a Friday, because we have all these things going on around the world, Powell might be talking again. I'm not refreshed on the economic calendar. It's just a lot of things to consider, and why after I get what I'm looking for, once you secure the bag, there's no reason to push it. All right, so I think that was the last question. Hopefully that covered your question for you, Carla. And again, thank you for your support. So with that, I think I'm going to go ahead and close out here. Thank you guys for joining us. And if you do like these videos, be sure to give this a like and a thumbs up. Helps us out greatly. So with that, hope you guys have a great rest of your day. Take care, good luck, and good trading.